Good morning and welcome to today's pre-market video. Now in today's pre-market video, we'll be taking a look at three things. Number one, we're taking a look at Infosys. Number two, we'll take a look at ICICI Prudential results and what to do with it. Number three, we'll take a look at the Nifty. I'm not taking a look at the future outlook of Nifty, but the Nifty trades which I had shown that I had done in Tuesday's trading session, I'm going to cover them and as what I used to catch the full short and then what I used to catch the full long. And how basically what information points I saw on the chart which signaled to me, okay, now you go short, and what information points I saw which signaled to me it's time to go long. Now before we look into all of that, let's take a quick look at the news. Now as I said in Sunday's pre-market video, this week is not based on that data, it's going to be based on Trump and it's going to be based on Nirmala Sitharaman's budget. So I reiterate that again, that this week I don't believe anyone should be having a clean opinion that you're bullish or bearish. If you're going to have a clean opinion, you're most likely going to make a loss, especially if you're doing intraday trading. We're going to get both way moves, and that is where I think a lot of people made a mistake in yesterday's trading session, and why someone like me ended up benefiting, as I have removed the bias that yes, I should only be going bullish or I should only be going bearish in this week. And most are having that bias as they believe Trump coming in will do something fantastic for the markets all of a sudden and stop FI selling and stop all of that. And on the other hand, the bearish traders are thinking Trump coming in is the worst thing, and while according to me it's a neutral factor. So according to me, this effect will run till around Thursday's trading session, Nifty expiry basically, after which it will taper off and we will end up now starting to play the budget play with the rumors coming in from people like CNBC and all. They'll pump up the rumors, tax code, this is happening, so as to create market movement and benefit a bit of the benefactors. Now, that's it really on the news front, and now let's take a look at Infosys and then we'll take a look at ICICI and Nifty. Now when we come to Infosys chart, now those who watched my previous Infosys video the day the results were released know that I had given two price targets on the downside, 1820 and 1790. I've removed 1820 as we broke through it, and we have stopped exactly at 1790 and we have held that support like glue. But now what's the next trading plan? Now since we have made good money, anyone who watched that video will have made good money if they acted on the data. Since we have made good money, according to me, now it's time to be cautious with it. This is as long as it is between 1855 and 1790, you're not going to get much of a trade. This zone is only for intraday option buying. And those in intraday option buying who are also good at scalping, not just a general option buyer thinking they're going to go and they're going to make good money. So this zone is only for intraday option buying, and as right now the stock is waiting for two things according to me. First, it's waiting to see how the 20 and 50 day fare. As you can see, the 20 day is attempting to do a cross over below the 50 day, and if that happens, it's very bearish for the stock. The second thing the market is waiting for is the volume build up and the trend catcher. If we look, when the fall happened, the trend catcher indicator's black line went very steeply down, but the red line did not go that steeply down, and that is why we ended up coming and holding the 1790 support how we did. So now the black line is sort of going to have to cool itself off, and that's what is causing this range to start forming. So until it does that, this range is going to hold, and the only time you, I think, should take a trade in Infosys now, if you're an F&O trader, is on the break of 1790 or 1855, as I said. Now if it breaks 1790, then it's a short to 1735. By chance it breaks that to 1645, but according to me, the maximum it can go to as of now is 1735. I don't think it can go straight towards 1645. On the other hand, if it breaks 1855, then it's a long to 1890, which is a small resistance, but if it manages to break that, then 1940 comes up. So my trading plan for it is going to be pretty simple. Between 1790 and 1855, I'm going to intraday trade it only. If it breaks 1855, then I'm going to end up selling P's below 1800. On the other hand, if it breaks below 1790, I'm going to end up selling C's, selling calls basically, above 1820. Why I'm not selling exactly above 1,800 is I want to give a bit of a margin to play for the whole thing, and those who watch my videos from a while know my logic behind such things. Now we'll take a look at ICICI Prudential. Now ICICI Prudential's results came out yesterday, and according to me the results are good. This is as the net profit rose by 43% to 326 crore. Net premium income rose by 23%. Sorry, net profit rose by 43% and net premium income rose by 23%. Value of new business VNB rose by 8.5%. The only thing which I see in these results which is a bit negative is that the margin pressure has come in due to product mix shift. But everything else, steady VNB and APE growth, higher ULIP focus, which boosts revenue, but it will naturally lower margins, which it has already done. Customer focused strategies, so the results are good. But according to me, right now, due to us being in a bear market, and I know many will say we are not in a bear market, but just open the Nifty 500, open nearly every sectoral index, from Nifty, Realty, IT, Pharma, Banking, whichever sectoral index you want to open under Nifty or BSE even, it has completely tanked. Stocks have tanked up, some up to 50-60%. So we are in a bear market. In a bear market, even good news like good results sometimes does not have any effect. So everyone who's looking at ICICI Prudential, keep that in the back of their mind. Now, what is my trading plan for ICICI Prudential if I look at the charts? Now, according to me, as long as ICICI Prudential is between 620 rupees to 675 rupees, this is a no man's land. Neither the bears are going to win here, neither the bulls are going to win. This is more of an intraday playing zone for F&O traders and positional options sellers to sell calls above 675 and sell puts below 620 for, let's say, Feb series. But if it breaks out of this range, that's when we are going to get a big move. So my trading plan is I already basically hold C cells above this and P cells below that, not below 620, but I've gone below 605. This is as if we have a bit of a bearishness, then we will go down and touch it. There's an option selling. But what is my plan as an option buyer? Now, as an option buyer, if we break 654, then it's an intraday long to 675 or maybe an overnight. But on the other hand, if we break 620, then it's an intraday or overnight short to 605 if 620 breaks. On the other hand, on the equity side, if we form a base at this point, then I will start looking for an equity long to 675, and if it breaks that, above. If it breaks 605, then I'm not going to touch it, it will be going down to 580. So I've shared my equity trading plan plus my F&O trading plan, and let's see how it goes. And according to me, as long as within that range, it's not going to give much. Once it pops out of that range, that's when those plans will get activated. On the equity side, I am looking at it because that's a very major support, 605. And if that holds, it can cause a dead cat bounce. If that breaks, ICICI Prudential is in for months of pain, according to me. So that's my trading plan. And now let's take a quick look at the Nifty index. Now in the Nifty index, I'm taking a look at the trades which I had shared yesterday I had done, and what was my logic in taking that short, and what was my logic in taking the second trade, which was a long. After that, as I had said on Twitter and YouTube ever, I stopped trading as I had got two big trades, and after that in day trading, usually decisions start coming silly as your brain gets mentally exhausted. As day trading does take a lot out of somebody in terms of trade. So I've highlighted my first trade and my second trade. Now the first trade which I showed, I had entered via options, and I had shorted the market at 9:31 and 59 seconds. So basically 9:32. And if you look, that is this candle. This price bar, I had shorted it. Now, what was the criteria of me shorting? Number one, we had a gap up and we had upside rejection here, and then this again was an upside rejection which occurred. So I entered a short here, and plus, apart from this simple price action show, my volume indicator had number one, simple volume had dried up. Then if you look here, the bears in the previous price bar had come at equilibrium with the bulls. So that means the bearish volume had come in a big way, and then we can see that the next candle which formed was a big black one, and we can see the volume. The bears ended up taking nearly 70% of the volume all of a sudden, and that was my first indication. My second indication was that if we look, my trend catcher indicator had done a crossover. The black line had crossed below the red, and since it was right above the zero mark, it was a high likelihood that this was going to be a big juicy short trade. And those who have seen my post on Twitter and everywhere can see that entered it at 90, exited at 201. So it was a big juicy short. And why did I exit at this point? Now I exited at that point as the support which I had given even to clients we were using, one of the supports was 23,180. So since we had reached the support, that was the first criteria, that it was time to book shorts. Second, if we look at this point, the trend catcher indicator, the black line of mine, had started flattening out. So that indicated that the game was over, and we could see price rejection happening here, price rejection happening in this black bar, and so we had three signals for exit: price rejection, trend catcher indicator had flattened out, and we had reached the critical support level I had shared to clients even. So that was the first trade. Now how did I catch the second long, which many go and say it is sudden? Why I believe they don't know how to trade. It's as simple as that. Is if we look at it, we had entered a box range and we held my support at 23,180 and we were trading in a tight box range. Now, what was my signal to go long? As I have said, the volume came in. Now, naturally, I can only show this much on the screen, but there's a lot of other volume data which I collate. But this is a simple volume, how it looks at. If you look at how much bullish is coming in, how much bearish coming in. Now, I entered at basically, if you look at the timing, I entered at 11:34, and then I was out by 12:05. Now, why? Now, my entry criteria was, number one, we were in a range, and we were holding my support level, which was a big important. So it was number one criteria, go long. Number two, my trend catcher, my black line had started sloping upwards all of a sudden, and it was right below zero. So if it popped above zero, this thing was going to rally. Number three, the bullish volume had come back. Since the bulls had got back control, the bears had now dropped to around, when this box range was going on, if you see at this point, bearish, 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 bears are controlling. Here all of a sudden, the candle before I entered, the bulls came in and ended up taking 70% of the volume. That signaled, that plus my support, plus the trend catcher indicator, signaled we're going to rise. So anyone saying that's a manipulated move just doesn't know how to trade and isn't using the right tools. Then, why did I end up booking out at this point rather than this point? Now, the reason of that is as simple as this. Number one, once we reached this point, I started watching for an exit. As what the resistance which I had given to me, clients even, which I'm using even, was 23,480. Now, we had reached near that as we had hit a high of 23,440. So that was one sign to start pulling back. Yeah, so start timing your exit. Then, apart from that, at this point, we see that the trend catcher indicator, black line had crossed below the red line. So that was a sign that the trend had again shifted. Remember, this I'm trading it on a 2-minute time frame. So it's fast trades. I'm not thinking I'm going to sit down and sleep with it. So my expectation was that things are going to go down. Number three, we can see the bullish volume had declined completely. And now bulls are still in control of the overall volume, but the overall volume is not strong. That signal, we're going to fall. So criteria of exit, simple. We have reached my resistance level. The black line of the trend catcher has gone below the red line. Volume had disappeared for the bulls. Things are going to fall. Why didn't I catch this short? I had to exit my long. Once I exited my long, mentally you get exhausted. You've caught two big trades. The first trade double, second trade nearly double. So after that, you're no more interested in the market and you shut up for the day from intraday trading. And then I went on to do Sensex expiry trading as first half of the day, did option buying in Nifty, Bank Nifty and Mid Cap Nifty as I shared for all three, but now I'm covering the Nifty. And then second half went and did Sensex option expiry selling and made a returns through that. So that's how I traded the Nifty index yesterday, and that's the logic which it was behind it. And anyone who liked it, then hit that like button below and subscribe to the channel, and also click the notification bell. Any questions you have, drop them in the comment section below. Any suggestions you have, drop them in the comment section below. And any stock you want covered, drop its name, and if there's something worthwhile talking about it, then I'll cover it in the upcoming videos. Thank you.